Hi, and welcome to Debt Tale. This is Rebecca Bautista, and welcome to Banking Basics video number 2. And we're going to be talking about savings accounts. So let's get started. So in our previous video, we talked about checking accounts. Now let's talk about savings accounts. So a savings account is a type of bank account you utilize when you don't plan on spending that money right away. Now, savings accounts are different than checking accounts because with a savings account, you usually do not get a debit card or check writing privileges. Not only that, but a bank will pay you interest on the balances that are held within the savings account. Why? Keeping money in the bank enables the bank to then take that money and issue it out to others for loans for higher interest, and therefore it helps them cover their expenses. Now, savings accounts at banks may have a 6 withdrawal limit. Now, this limit was imposed by Federal Regulation D. However, it was put on pause due to the COVID-19 pandemic. Still, I find a lot of banks are utilizing it and still having a 6 withdrawal limit. When you go over that, you may face a penalty, or they may convert to that savings account into a checking account. Generally, savings accounts offer a higher interest than checking accounts because, again, with checking accounts, you have a debit card and usually your money is going in and out of the bank frequently, while with a savings account, there is a limit of 6, so your money is more likely to stay within the holdings of the bank. So savings accounts are generally used for short-term and long-term savings goals. So standard or basic savings accounts at many traditional banks tend to offer interest. However, they may be lower than other savings account products out there. Now, occasionally there are opportunities at these banks to bump up the interest rate. Sometimes it's in a tiered model in which the first $1,000 may be at one interest rate, then the next amount is at a different rate. And there are some traditional banks that offer higher interest rates, but the balance requirement is higher. Now, online banks may actually issue higher interest rates for their savings account than traditional banks. What you want to keep into consideration is whether or not you want to trade the convenience of a traditional bank in which you have more branches to reach out to, or if you don't mind that, then you can go to an online bank where all your transactions are usually done via an app and you have an ATM network to deal with instead of bank tellers. As always, you want to look into the different savings accounts minimums. Some have no minimum, some have higher minimums. In general, banks will try to incentivize more money to be within their banks because the more money they have, the more they can loan out. And so large balances will have generally a higher interest rate attached, or an incentive for first-time deposits of, $10,000, $15,000, $20,000, they'll add an extra 5% back. Another thing is that most savings accounts are FDI insured, meaning that you are covered for $250,000 should the bank fail. So why do online banks generally have higher savings rates? Well, the reason is simply they have less operating costs because they aren't paying for rent and having additional employees staffed in traditional brick and mortar locations. In that regards, they are able to pass on the savings by offering a higher interest rate. So a savings account is valuable because you get to put your cash money into a FDI insured location and you can earn some interest on it, which is better than what you would do if you just put your money in a little bit. Now, it also offers easier access to your money than compared to taking that money and putting it into an investment, but it does have less access than a checking account because, again, for the most part, many banks still limit you to 6 convenient withdrawals. Well, I hope that was helpful. It was just a really quick, what the heck is a savings account? Which is, it is an account that you park your money that gets some interest on top that banks can then take that money and loan it out to others and make more. If you have any other questions, please feel free to leave a comment below. I hope you're having a good one, and until the next video, I'll see you. Bye.